Hello everyone, welcome to the 6th edition of Finance Crunch, where today we're going to be talking about a little-known SPAC merger that was recently announced. So let's get started. Today we are going to be talking about the recent merger announced between the Special Acquisitions Company, New Providence Acquisitions Corp, and Avalon Space Technology and Science, known as AST or AST Space Mobile. After the merger, the implied pro forma enterprise value of the company will be $1.4 billion, and the expected equity value of the company will be $1.8 billion. It's also expected to close in the first quarter of 2021. They are using a private placement to finance the transaction, which is worth a total of $232 million. The transaction was led by the strategic partners of AST, which were Vodafone, Rakuten American Tower, Samsung Next, and UBS O'Connor. NPA's management team brings operating, investing, financing, and transactional experience and has worked together for over a decade. The management team also has 50 investment professionals from UBS O'Connor at their disposal, which have a broad experience across asset classes and capital markets. AST was founded in 2017 by Abel Avalon, the current chairman and CEO of the company. Abel built AST with the purpose of designing and manufacturing miniature satellites for low Earth orbit to provide broadband access to consumer phones on a global scale. He initially provided a seed investment of $6 million in 2017. Within a 3-year period, AST was able to secure several strategic partnerships and agreements with several different companies. The satellite Blue Walker 1 was also launched in 2019, and the Blue Walker 3 is currently being assembled. There are many attractive attributes in NPA that investors should look to. One being that there is a large untapped market for the specific product that AST will be providing. There are approximately 4 billion people that are unconnected to the broadband and a $1 trillion addressable global market that AST will be able to penetrate. On top of this, there's a large turnover with mobile phone users, with 5 billion phones that move in and out of service. AST Space Mobile plans to provide broadband service from space to mobile phones by launching satellites. Once the satellites are in space, AST will use a customer base from its industry-leading strategic partners to provide Space Mobile to 1.3 billion existing customer relationships. This will increase revenue and reduce customer churn because Space Mobile is using revolutionary technology, including 750 plus patent claims and creating a first-mover advantage. AST Space Mobile will be the first company to bring broadband from satellite directly to unmodified mobile phones, and it will provide service to individuals where there are cellular coverage gaps. The business model will also be flexible, scalable, and it will provide frictionless access of the Space Mobile network to AST Space Mobile wireless partner subscribers with 50-50 revenue share agreements. Another compelling attribute of AST will be focused on the financial profile and potential investor returns that it will provide in the future. The staged deployments of the constellation of satellites will be financed by the SPAC transaction and will provide net positive operating cash flows in 2023. The network capacity and limited operating expenses after the deployment of the satellites will result in EBITDA margins of over 90%. Once the company progresses in deploying satellites throughout the next consecutive years, this will give AST a greater ability to infiltrate the $1 trillion marketplace and provide service to the near 4 billion people that are without it. Throughout the next several years, AST is expected to complete a 4-phase process with the goal of launching 58 satellites that will provide full global MMO coverage and faster data rates. When the merger is expected to close in Q1 2021, this could be a catalyst for NPA's share price to rise. Investors are likely to want a piece of the action given the investment opportunities. The combined company expects to receive up to $462 million in gross proceeds from the transaction. Phase 1 of the commercial launch will occur in 2023 and will be funded by the gross proceeds from the transaction. There will be no debt on the balance sheet, which will also entice investors, proving that the company is financially sound. News of other strategic partnerships could also provide the company with the catalyst for growth. New Providence, which currently holds approximately $232 million in a cash in trust, will combine with AST Space Mobile at an estimated $1.4 billion pro forma enterprise value, or 1.4 times calendar year 2024's estimated EBITDA of approximately $1 billion. Projected revenue is expected to be positive by 2023 with an estimated amount of $181 million. Also, by 2024, the year-over-year revenue growth is expected to be 490%. It is also important to realize that the SPAC shares will only account for 16% of the total ownership of AST, assuming that there is no redemptions of NPA's existing shareholders and transaction expenses of $39 million. Personally, I believe that if AST is able to launch enough satellites and the merger closes, between now and 2024 will be a good entry point. I say this because if their projections are correct, by 2024, AST will be able to infiltrate a $1 trillion marketplace with a lot of potential for growth. Some risk factors that investors should be wary of revolve around AST's ability and capacity to be able to launch enough satellites to be competitive in the market. There is also the potential that one of the satellites may crash. In October 2020, AST drew the attention of NASA as the space agency commented on AST's FCC proposal by pointing out that the satellites would be extremely large and that they would create an unacceptably high risk of catastrophic debris-producing collisions. However, following the comments that were made, NASA and AST said that they would come together to find a solution. AST assures that competitors such as Iridium will not be an issue because they are in possession of patented technology that provides space-based cellular broadband services to unmodified phones, as opposed to using costly ground antennas or specialized phones. This will make SpaceMobile competitive and expand the market as people in remote areas that do not have the infrastructure will be able to use the network. However, companies may adapt to this technology shift in the future and eat at AST's market share. This stock is almost pure speculation as the company has one satellite in space to date and the merger hasn't even gone through yet. But if you are looking for a long-term investment that could potentially revolutionize the telecommunication industry, then this may be an investment that satisfies your needs, especially since the company is estimated that they will be able to connect the unconnected, unlocking massive potential for growth. You could see a massive lead up before the merger, with ample opportunities to take profits or wait for the merger to go through. Just a reminder, I'm not an investment professional or a financial advisor, and everything that you hear in these videos are my personal opinion. Alright guys, thanks for listening, and don't forget to like and subscribe.